Here are your top Canadian real estate stories for the second week of July. This big bank just changed its rate forecast and it could impact your next mortgage move. Is the rental market finally cooling off across Canada? New report shows a shift in Canada's rental market. And are you renewing your mortgage? You might actually be paying less at renewal. We'll tell you more about that. If you're one of those hopeful people still waiting for mortgage rates to drop further, RBC says that wait might be over. According to a new forecast from RBC, the Bank of Canada is unlikely to cut interest rates any further this year or next. They now expect the overnight rate to hold steady at around 2.75% through 2026, which is more cautious than some of the other big banks. This means mortgage rates may have already bottomed out. If you've been sitting on the sidelines waiting to buy or refinance at a lower rate, this might be your window. Why it matters? RBC's outlook signals that borrowing costs are likely to stay where they are, and if inflation remains sticky, we could even see pressure to increase again. It's a good time to have a mortgage plan in place, not just a rate prediction. National rents just dropped for the 9th month in a row, but don't get too excited yet. According to the latest report from rentals.ca, the average rent across Canada in June was $2,125, down 2.7% from the same time last year. The biggest declines are happening in places like Vancouver, Toronto, Calgary, and Montreal, especially for condos and single-family homes. But here's the catch. Rents are still 12% higher than where they were 3 years ago. So while the market is finally softening, affordability remains a major challenge in many cities. Why it matters? If you're a renter, this might be the best time in years to negotiate or shop around. And if you're a landlord, it's a reminder that pricing power is shifting and the days of rapid rent increases may be behind us, at least for now. And lastly, not all mortgage renewals are painful. In fact, some Canadians are seeing their payments go down. A new report from TD Economics shows that while many homeowners are facing higher payments at renewal, some are actually getting a break. Borrowers who took out short-term fixed or variable rate mortgages during the rate spike of a couple years ago are now renewing at lower interest rates, causing their payments to drop. Overall, mortgage costs are easing slightly across the country, and TD estimates about 1/3 of upcoming renewals fall into this relief category. Why it matters? If you're one of the homeowners renewing from a rock bottom 2020 mortgage, yes, your payment will likely jump, but for others, there's a silver lining, and the message is clear. If your renewal is coming up, talk to your broker or bank early. There may be ways to soften the hit. To stay on top of the Canadian real estate market, like this video and subscribe to the channel. If you like this video, you'll probably enjoy this one as well.